So we've seen Sequoia, Y Combinator, multiple firms come out with their version of RIP Good Times. What is Initialized's take?
Well, I think what we saw was the news sort of trickling down slowly to founders. And I would say about a month and a half ago, I was hearing from a lot of LPs about the slowdown, and they were seeing it in their public markets, in their books, their public books, and VCs sort of got the memo from their own LPs. And right now I'm having the conversation with our founders about how it really is looking like this is a downturn. There's still some denial in those ranks, and some defenses about how particular businesses may be able to withstand that. But Initialized's take is that, yes, we are looking at a downturn, and we shouldn't panic. We're seed stage investors, so we're in the business of taking chances on founders and hoping that they'll figure out their business models and to conserve a little bit of capital for the longer term.
The big question is, how big is the downturn going to be?
Sure, and I don't think anyone has a crystal ball, but at least at the early stage, at seed stage investing, what we're really hoping is that they can find a product that people want and that people will want to grab out of their hands. And at that stage, we're always going to be in the business of taking those chances and pivoting quickly and trying to find something that people want.
What are you seeing? Are fewer rounds closing right now, or are founders saying, I'm not even going to try to fundraise at this moment?
Absolutely. I've been advising companies to delay, not to go out and rush and do a panic fundraise, because I think that VCs are exhausted from the last 2 years of really, really bullish markets. And I know so many that are looking forward, myself included, to taking some time off this summer. And so it's not a great time unless you are already planning on fundraising anyway to sort of go out there and shake the trees for some more capital.
So what should founders do if they need to extend their runway?
Well, there's plenty of ways to cut costs that don't involve raising capital. And certainly there are leases that they may have that they could sublet. We actually just put out a blog post about how it's possible to even cut maybe, say, a small percentage of your staff, or cut everyone back by 1 day a week, and that would reduce 20% of your labor expenses, which tend to be 75% of the overall budget.
That's so you're advising layoffs. Is that what
well,
you're saying?
I wouldn't say that we're advising layoffs. I think we are advising to not panic. Take time to prepare if you actually need to raise capital, and prepare your story, and think about some cost-cutting measures that may not involve laying off, including cutting back on expenses like snacks, or cutting back on retreats for those companies that have gone remote, or cutting back on offices.
But suggesting that employers cut employees from 5 to 4 days a week, that's interesting. I haven't heard of that before.
And it's certainly something...
Tell me more about that idea.
Yeah.
Are you talking employees across the board? Are you talking about contractors?
I think it depends on the teams that are involved, but certainly I think that we could afford to cut a certain amount of days, or cut everyone's salary proportionally, and most employees would be happy to accept that, because if it was them looking at the face of getting cut entirely, or 20% of their workforce getting cut, versus taking an across-the-board pay cut, which my husband's company did during the start of COVID, they accepted it, and they were happy that the cuts weren't deeper.
What company was that?
I don't know if I can disclose on TV, and but they've come out of they've come out of COVID just fine, as many companies did.
Right. So let's talk about what Initialized is looking for in the road ahead. I mean, are you still looking at? Are you still putting money out now, or not? Have you also paused your investing?
No, I mean, we're in the business of being optimists. We're in the business of looking for companies, and I've had the benefit of being an investor and being in this market through a couple of downturns. And so absolutely, we're still looking at pitches, we're still talking to founders, but I do think it's true that I personally was very, very busy over the last couple of years, and looking forward to taking some time off as my kids' school ends on Friday.
So when you look ahead, what are the sectors, the bets, the trends that you think are actually going to flourish in this market? Like, what are you most excited about?
There's a lot of different sectors that I'm excited about. I think that, for one, I'm interested in the markets that appeal to consumers that may not have received software transformations in their businesses. Another industry that I'm interested in is sort of beauty. I think that's one that has stood up well in historical downturns, and generally appeals to more female or underrepresented groups of the population as far as consumer investments go. And I'd be remiss if I didn't mention our fund's focus on sort of crypto and Web3 technologies, which is one that we're still actively pursuing.